Alan, we've had a couple of interesting years in the wind energy business with a fluctuating oil price and worries about subsidies for wind power being reduced. We got an update today from Vestas, the biggest pure play company in the industry. What did we learn?
Okay, Vestas is the Danish wind turbine maker, and they had a fantastic quarter. They beat earnings expectations by a mile, and more importantly, they had order backlog built. They had more orders in the first quarter, normally a seasonal low, more in the first quarter than they've ever had. So it's good, and it seems like cash is starting to build up now again on the balance sheet.
Where is this plenty of new orders flowing from?
Well, the orders are, one major market has been in the United States, so that's key for them. But also, they have been trying to get into the emerging market space. Brazil is one place that had, where the orders were a lot better. In fact, in the first quarter, they had more orders than they had in all of 2014. And China is another place where they've built up orders. Overarching the theme here is that prices per megawatt are also going up. So it's good. It's good.
Right. And we're reaching a point, presumably, where wind, as volumes go up for the turbines, you get price competitiveness over the life of the turbine with other energy sources.
Yeah, well, right now, for a long time, subsidies made the difference. We're starting to get closer to some sort of grid parity, or even approaching parity in some cases with alternative fuels like natural gas in the United States. So, as low as natural gas is in the United States, wind
is competitive.
It's pretty competitive. So,
you mentioned the fact that cash is building up on Vestas' balance sheet. What should Vestas be doing with their cash, and what are they doing with their cash?
Well, for one thing, they upped their guidance for earnings for this year, including their free cash flow estimates to about 600 million euros from 400. The cash on the balance sheets now, I think it's getting close to a fifth of the market value of this company. So, what do they do now? They
got to do something, yeah.
What do they do now? A few years ago, near-death experience for them has scared them. They now talk a lot about solvency, i.e. equity to assets.
They had a terrible period where they almost went out of business,
and they're sort of swinging the other way towards caution, and they probably don't feel they want to give away too many dividends. They started paying dividends again, but I think they're going to have to meet, somewhere in the middle here between the worst case scenario and the overly best case scenario, and pay some dividends more. Maybe we'll see more special dividends or an increase in dividends, but at some point they have to pay this.
Well, certainly in a volatile industry, a steady dividend would send just the right message. Thanks, Alan.